Hello everybody, it's me the Boss Hog, and today we're going to be reviewing my/our wealth as of the end of August 2021. An interesting month because I didn't do the end of July, just with a new job and a bit of family sickness, didn't have the time for it. There's also a new income stream as well I'm going to be talking about, so bear with me, slightly unusual this week, but let's walk through it anyway. Alright, so on the good side, running ahead of August target by a reasonable margin, a good margin really, 9 grand, so that's about 3% ahead. To be honest, a lot of that's underpinned by ISA and pension performance, which has just been on fire, rather than anything else. I would say as well that the wages are also a bit weird at the moment. Like when I moved jobs in July, I got paid too much, and then August, my tax was pretty brutal, so I don't even know whether my wages are correct at the moment. I did get a bonus, so that definitely helped with the June figures especially, but I'm not 100% sure where I'm standing, so we're going to have to wait and see how that shakes out. But broadly speaking, actually, I thought that sort of a combination of like leaving dinners, we've been eating out a reasonable amount now that our daughter is old enough to enjoy such things, and COVID is somewhat being managed. So I'm actually fairly happy with how well this held up, but again, a lot of that is, to be honest with you, with the investment performance, so it's not really like liquid cash or anything else, but not to be sniffed at. In terms of July here, because this requires being relatively on top of admin, and I wasn't, I've just matched it up, so don't take too much stock in July, but the August figure should be materially accurate at least, so reasonably happy on this, right? It's difficult not to be. All right, but let's have a look at the details, because there is some interesting stuff within the details. All right, so this is where it starts to get a bit more interesting. You may well see the table on the left there that July isn't populated. That's just because I've decided to skip it and give you the 3 months before that. And it's kind of interesting, I guess. So first of all, I'll introduce you to my poker pot. There is a dedicated bit later in the video specifically to discuss that, but I profitably side hustle poker. I'm going to be doing it a little bit more and hopefully earning high 4, low 5 figures a year is the target, which is what the history tells me I can earn. For now, that's my overall poker pot rather than profit, and again, we'll talk through that very shortly. The big jump, though, you can probably see there is the ISAs, as well to a lesser degree of the pensions. But the ISAs, we've been adding a lot of capital to them. The performance is at all-time highs. It's really starting to get going, actually, with the snowball, which is also pretty exciting. And also a lot of my US bets especially have come really good. My UK ones are still lagging a little bit, but I had a good month in August for sure, so that's really boosted that. Should slow down in the future because one of the ISAs is at 99% and the other ISA is about 75% for the current financial year, so we haven't got a lot more capital to add to it, but hopefully the performance will improve. What this has meant is basically our other pot, which kind of includes a liability that we have to pay back in June 2023. That's what the kind of minus 30,000 currently is. But if we needed to, or like that liability was called earlier, it's a family commitment. Then we have money in our home. We could liquidate the shares. So overall, it's relatively good. I would say though, between my side hustle here, the poker, and my wife's side hustle, who's doing sort of productivity coaching, we're definitely running our finances quite tight at the moment. But hopefully in a reasonably sensible way, and I do try and keep on top of it and everything else. So, but it's definitely moving in the right direction, supported by the stocks and share stuff. So it's pretty awesome. All right, so in terms of home equity, this is just nudging up in the right direction. A couple of months ago, this was 30.2, now it's 30.8. So again, this is a 25-year commitment, right? I have to say that it is even very satisfying just paying, £1 or £2 more each month to capital and £1 or £2 less to interest. That is quite exciting. Our home is growing in value. I think I'm overly pessimistic with our home growth. I have it annualized at 1.5%. Even in London, we're sort of in middle to outer London. Like the property around me is growing quicker than that, but I'd rather be pessimistic with these things, so that's fine. Otherwise here the mortgage is actual, and therefore our percentages is a reflection of those two things. So moving in the right direction, not too much more to add on that, to be honest. All right, so in terms of pensions, I'm actually maybe happiest with this part of our wealth. In January, I made big changes to both my pension and my wife's, and that was really because those pensions had been set up in a very risk-adverse way. In fairness, when I looked at past performance, even in like March, April last year, when the stock market got savaged, actually my pension portfolio held up reasonably well. It like hardly dipped at all. So it was being very well balanced, but it was just missing out on a lot of risk and reward. And seeing as we're, you know, more than 2 decades away from retiring, that seems too prudent. So we've started to see a acceleration actually on our pensions, which is good. Again, the market's super friendly at the moment. I have annualized growth projections on pensions of 7%. One of them is at 9% and the other's at 10%. So they're both running well ahead of expectations, even with any sort of management fee deductions and things like that. It's still comfortably beating 7%. So happy with how these are shaping up. Again, I do need to do a little bit of pension management. My wife's company transferred her pension, so there's another pot that I have rolled into this and classed it as Royal London, even though it's a different pension. And likewise, actually, with my Standard Life, my new employer is also using Standard Life, and again, I've just lazily lumped it all together for ease and simplicity. So I do need to do a little bit of admin on this, but for now, the figures themselves are actually correct. Just the breakdown could do with a little bit of improvement. And my plan is as well, once my final pension contribution from my previous employer comes through, I'm going to be moving, you know, about 34,000 from Standard Life into Nutmeg and just consolidate my previous pensions just to make it easier for me to manage, basically. So that's the plan, and I'll probably use, when that actually happens, I'll use that as an incentive to properly update this. But for now, these numbers are correct, and that's probably good enough. All right, so again here, the June and July in the graph is identical. You can see May in the table there was +7, +6, but it's been a big growth. So over the last 2 months, effectively, July to August, June to August, that's gone up 16,000. Again, we've added sort of almost 10 grand, more than 10 grand actually, into our ISAs. But on top of that, we've also had some great capital growth, primarily on some of the bets coming good. So that feels really good. The Aurelia fund there, that's our daughter. We just add £100 into her ISA, which is specifically for her. We can use it before she turns 18 if it's for like things that directly benefit her, either like education or something. But honestly, the plan is really to give her it as like an 18-year-old, here's your present. She gets made aware of it at 16 and owns it as of 18, and the plan is just to do £100 every month into that. So that's quite nice, actually. That's performed quite well. 2,000 of that is capital, and then 214 of it is growth. So that's moving in the right direction for her as well, just to give you a little bit of detail. I do that through Nutmeg, and I have to say, Nutmeg is very simple as a platform. I'm not sure if it's available in the US, but definitely in the UK, it's very simple. It doesn't sort of have all the bells and whistles of, you know, like trading 212 or something, but it's very easy if you just want to kind of send and forget. And so far, I've been quite happy with the performance. You know, this one's running at like over 10%, so good for them, I guess. But yeah. Again, here lots of good news from my shares. If you're interested in any of my share videos, that's mostly what I have on my channel at the moment. So feel free to check them out, or just ask me some questions below. I'll always do my best to answer. But yeah, definitely pleased to. All right, a new slide time. So this is my side hustling poker. The graph here on the right, this is my performance over the last couple of years across 96 live poker sessions. I only play live. I think I've got a bigger age and it's worth my time to play live. It's not worth my time to play online, frankly. But you can see here, I'm moving in the right direction. I'm profitable in about 68% of the sessions that I play in. So, you know, again, that you do sometimes lose poker. And the agreement I have with my wife is that I have a deposit of £3,000. So I'm in the process at the moment of kind of, you know, drawing that down. And then I'm just kind of going to casinos periodically, trying to go sort of twice a week, maybe 100 times a year is the target. If I'm honest, I feel a bit rusty at the moment, and I haven't been running especially well, so I'm actually quite delighted to be up sort of £639 across the last 4 sessions, because it's been a bit of a slog, partly self-inflicted, but I definitely haven't had the good run either. The self-grade there on the top left table, that's fairly arbitrary in a way, but it's kind of, you know, if I made a big fold or I'm really maximized value, and then the opposite as well, you know, did I make a bad fold, did I miss an opportunity there, etc. So, you know, my last session there was the first time I really felt very good, made a couple of really good plays, I think, and didn't have very nice cards. So again, really delighted with what's not a massive profit, but all moving in the right direction. So sometimes when you're trying to make money playing poker, those are the kind of sessions that will kind of be the difference maker, right? Anyone can make money if you're getting all the luck. And likewise, everyone's going to lose money if you're getting none of it. It's kind of the middle grounds where, you know, like you need to minimize losses or maximize wins that will really be the difference. So again, I am rusty for sure. I didn't really play during COVID. Had a very young daughter at the time and didn't really enjoy the the screens and the masks in the casino. It just didn't feel very natural for me. But I'm only going to spend about a minute on this because it's not really a poker channel, it's an investment channel. And by the way, poker is definitely not investment. But, you know, I love the game, frankly. It is a way I can earn money, and it is something that I'd like to do. So my plan here is to basically withdraw my £3,000 allowance, have a pot of about 5,000, which should be, you know, that's enough for about 10 sessions at the stake that I play at, you know, losing sessions. And then anything over 5,000, I'm just going to create like an income into our joint bank account. So gradually I'm going to run down effectively our other assets to build up this, is an asset just specifically set aside for poker. And then once I get to £5,000, then I'll use that as a level that I feel comfortable with that bankroll to start paying back in. So that's the plan. Again, any questions, I'm always happy to talk about it. I want to have a standing offer as well that if anyone would like to is a bit nervous maybe about playing in a live casino, I will buy you a drink and give you an introduction. If you're in any of the London casinos, I'm always happy to meet up, and I'm going to try and take your money, I'm not going to lie, but as a sort of friendly invitation just to make it slightly less intimidating. I think it's good fun. So there's a standing offer for anyone who is interested. All right. Okay, and I guess just to wrap up a little bit, so this does look a little bit wonky. I'm trying to think of a better way to display this. Probably the table here is clearer than the graph, but again here the liability is the bottom line. That's the main cause of the red line. But we have plenty of other assets to cover it if it needs to be called earlier. The poker pot is now in this as well. They're at 15.89 currently, so that's a combination of profit and cash. That's good. But yeah, broadly speaking, this is great. My wife does also have a side hustle, but at the moment it's still very early, and I'm not entirely sure how to display that either because she has like paying clients. I don't quite know what how comfortable she would be with sort of sharing financials. So I need to have a little bit of a think with my wife about how we choose to display that. With my wife, we've agreed to give her 10,000 of seed capital, and she basically has a rolling commitment to have 10,000. So if she has sales of 2,000, then she can have costs up to 12, right? And if she has 5,000 income, she can have costs up to 15. So that's the agreement that we've made. I think at the moment her costs are about 7 and her income's about 4. So that's roughly where she is. But both my wife and I are trying to work on additional income streams at the moment. So I think that's just to be as transparent as possible. But I haven't got agreement with her yet about what level of detail she's happy to provide. So I'll leave it at that for now. Basically, how that's represented is just a reduction in our bank balances, which is again one of the reasons why why our joint bank account is sort of drifting downwards. That is to be expected. I'd like to keep it around the 20,000 level because that's roughly 6 months of necessary costs, and I think that's a smart amount to have. So, but we're running it quite tight. But we've agreed to do it, so that's all good. Okay, so yeah, wrapping up, you can see here this is very similar to the opening bits of this video. Just a bit at the bottom there is a sort of reconciliation just to make sure everything is fine. But yeah, I'm really happy, still moving in the right direction. Actually, August held up better than I was expecting, considering we have been spending quite a lot the last few months on various things. And that has really definitely been helped by share performance primarily. Both my wife and I are sort of taxing our cash reserves relatively hard to try and set up our side hustles, but promising signs for us both, I think, so I'm optimistic on that front. And until then, it's just going to be a case of more of the same. I do have a new job. It more or less pays the same as my last job. I have more or less pays exactly the same with a few minor differences. I don't think I need to go into. It's materially the same. The main difference for me, though, is basically just a lifestyle change because my new job is 10 minutes from my door. So now that we're all starting to go back into the office and now that I have a young family, that's definitely a win for me as well. And actually, I'm enjoying my new job so far. So I still have sort of 4.5 months in the probation, but hopefully that's not going to be an issue either. So yeah, everything feels like it's moving in the right direction. Wealth is running ahead of projections, so that feels really good. And yeah, I haven't really got much else to add beyond that. But as ever, any questions, I try and be as transparent as possible, so fire them down below and I'll do my best to answer. Otherwise, hopefully you found it useful. I've been the Boss Hog, and good luck, I guess, with your wealth building. Thanks very much, everyone.